Alright, hey traders, this is Jack and welcome to your Friday video. It is September 2nd and we head into a long weekend. We will open up on Tuesday much lower than where we started on Friday morning. And the market just closed. By the time I'm doing this video, it's about 3:02 Central, so the market's been closed for 2 minutes and we are closing below heavy moving averages, stacked moving averages. The light blue line is the daily 100, the magenta line here is the 50, and they are crossing with the 8 and we are under everything. After a small macro event this morning, the unemployment numbers, we had a nice rally above 4,000, and that turned out to be the biggest trap outside of Thursday morning. Whenever we rallied all day on Thursday, and on the left-hand side is an hourly chart of all that. So, you know, it was not a bad idea to have a 4,000 pinning SPX butterfly until about 10 o'clock this morning. For about an hour and a half, we rallied above 4,000. And now what does it all mean now that we're under moving averages? I think this is a shortable event still. And I think it gives us good information on a very strong possibility of us trading back down to the July lows, where the squeeze that fired long originally back in July, you can see that here. And if you just draw a semi-straight line as much as possible, we've already cleared that range. We're kind of stepping back down, and I know that we're already at a second deviation on a daily chart. But if you look at this volume profile, you can see that maybe chopping around for a few days after a long weekend and a shorter week next week on Tuesday, maybe it makes sense to just kind of chop around above 3,900 for a few days. We'll draw some correlations here in a minute with the dollar index. I'm going to pull it up on the right hand side of my screen so we can kind of compare how strong the dollar's been. Nice little rally. Boom, it kisses that second ATR and the second deviation Bollinger Band, and still resting above that tree line at 108. And what does this mean after a day like today and yesterday, really? Because Thursday and Friday now have been absolutely bonkers. And you can see a 30-minute chart. I'll leave that up on the left-hand side to let this sink in here. This to me is a big tell. I am now going to be a little bit more bearish seeing what happened here. Now, before all this falls apart, maybe down to 3,800 or 3,700, will they try to rip it higher? I want to give you my levels of what I would expect if that were to happen. So the first level is 3,960. And then the second level is right at about where we were kind of this morning, and a little bit higher. So like 4,000, and then even, I mean, for a big rip, 4,100. But I'm not really expecting that. I think that's a little bit out of scope for me. Maybe playing the outside range at 4,100 makes sense, but that's still a 170-point move from Friday, and I don't know if we're going to even be able to be that strong within this first new fresh month of September. So if you look at these patterns, you know, let's just use this spectrum right here, and we go, okay, boom, head, shoulders, one more push higher, and we did that. That was Thursday, and now we're back down to here, and this is where the market closed today. So what does it all mean? Where are we going? Well, it would make sense to short any type of rip. We already know the moving averages from the other workspace, and this is just, you know, this is looking at this and going, okay, we're in the month of September. We have red 10x bars on the large time frames. A macro event with unemployment numbers just happened, and we sold off 100+ points from that in a Friday. We have September interest rate hike possibility, more Fed speak later on at the end of the month, trading under moving averages. So what do? Do we just fall apart next week, and then for the rest of September, do we rip higher? I think it's a possibility. It's tough because you've had strength in the dollar. We have this weird mixed Friday. And then you have things like gold and silver and crude making some fresh lows. But what I'm thinking on gold is it's time for this thing to bounce, and maybe bounce pretty hard. So I think this might be the last time we see it below 1700 or around 1700. There is a double bottom coming in. It's always something that I want to buy, and I also want to give myself extra time to purchase gold futures or long calls in GLD or the equivalent of whatever type of gold ETF or miner that you like. I know that some people like to trade NEM, Newmont Mining, VALE. That's more like a long-term nickel play. If you've ever heard me talk about VALE, more like a stock pick. But in the options world, I think the option chain for October and November on some long calls on GLD, I think it makes sense, but I'd be patient. We have a short week next week. Maybe this does fall apart below 1700 temporarily to confirm that double bottom pattern. I'd love to see that. And it's going to be my focus. So we'll see. Let's see what happens on Tuesday and Wednesday, and if it makes sense to short it up here at 4,000. That's one thing that I'll be focusing on. Shorting any of these large moving averages, maybe even 4,050 again, might just have to be what my focus is on. But geez, under all these big moving averages, I just got to think that at some point we're revisiting 3,800 and then kind of look out below. And that might be our welcome to the September month. And that also might be a good reason to maybe rip higher into October, November, back to 4,100, back to 4,200. This market's gotten a little crazy. It's changed personality multiple times this year, and this Friday is certainly weird. So we have a lot of really interesting levels that we discuss in the futures room. If you're a member, awesome stuff. I will see you in our sessions, and you'll have a wonderful long weekend. Those are my thoughts. Not so easy after a Friday close like that, especially with a Thursday rally that kind of came out of nowhere. But the question is, and I think it is the question, is if anything higher is only a short squeeze, what else is it, right? So maybe trading up to the VWAP makes sense. 39.60 is kind of my first level on the S&Ps for a short. And then all that is just, a false head fake move. And certainly something that you'd probably want to be shorting, especially under all these moving averages that, we've seen this for about 5 days, but this is only the third day that we've been under the daily 50. It is the fifth day that we were under the daily 108, 21, 34 cross. So super bearish on anything that goes higher. I can only think that it's a very temporary gap fill to the upside, and then it's all on the way back down to about 3,800 or more before this can have any chance of going higher. So we'll see how it all goes. Have a great long weekend, and we'll see you in the next one. Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.